let me ask you something real quick. What if I told you that most people don't lose money in crypto because the market crashes, but because of a few mistakes they repeat over and over without even noticing? If you're trading crypto, or even thinking about it, this video might save you money. So before we go any further, hit subscribe. Because this channel exists for one reason only, helping you avoid expensive mistakes. Now, quick disclaimer before we start. This content is for educational purposes only. It's not financial or legal advice. You are responsible for your decisions. Alright, let's get into it. The first big mistake is trading without a real plan. And no, I'll buy and see what happens is not a plan. Most traders open positions based on emotions. They enter because Twitter is bullish. They exit because the price moves against them for 5 minutes. No entry rules, no exit rules, no stop loss, no profit target. What happens next is predictable. You win small, you lose big, and over time, your account slowly bleeds. Professional traders don't predict the market. They react to it with predefined rules. If you don't know where you're wrong, the market will teach you by taking your money. The second mistake is risking too much on a single trade. This one kills accounts fast. You see a perfect setup, you go all in. Maybe 30%, maybe 50%, sometimes even 100% of your capital. And the market does what it always does. It moves against you. Even a good strategy fails sometimes. But when you risk too much, one bad trade wipes out weeks or months of progress. Smart traders think in probabilities, not certainties. They know losing trades are part of the game. If one trade can destroy your account, you're not trading, you're gambling. The third mistake is moving the stop loss. This is where ego enters the room. You place a stop loss. Price gets close. You think, it'll bounce. So you move it lower, then lower again. And suddenly, what was a small loss becomes a disaster. A stop loss isn't a suggestion. It's a line in the sand. The market doesn't care about your hope. It only respects discipline. Here's something funny. Traders say they hate losing money, but then they do everything possible to avoid accepting a small loss. That's how small losses turn into account killers. At this point, if this sounds familiar, you're not alone. Drop a comment and say, "Still learning," because that's what real traders do. The fourth mistake is overtrading. More trades does not mean more profit. Most beginners think activity equals productivity. So they trade every small move, every candle, every emotion. What they don't realize is that fees add up. Mistakes multiply, focus disappears. Professional traders wait, sometimes hours, sometimes days. They trade less, but better. If you feel the need to always be in a trade, you're not trading the market. The market is trading you. The fifth mistake is ignoring market conditions. Not every strategy works in every market. What works in a strong uptrend fails in sideways chop. What works in low volatility gets destroyed in high volatility. Yet many traders use the same approach no matter what. The market changes. Your strategy must adapt. By now, you can probably see a pattern. Most losses don't come from lack of indicators. They come from lack of awareness. The sixth mistake is chasing the market. Price pumps. You feel late. Your heart rate goes up. You enter at the top. Seconds later, pullback. FOMO is one of the most expensive emotions in crypto. If you didn't catch the move, that's okay. Another opportunity will come. Markets reward patience, not panic. The seventh mistake is ignoring risk to reward. Many traders focus only on being right. They risk $100 to make $30 and feel good because they win often. But one loss erases multiple wins. Winning trades don't matter if your math is wrong. Even with a low win rate, you can be profitable if your winners are bigger than your losers. The eighth mistake is copying others blindly. Signals, influencers, random screenshots of profits. You don't know their entry. You don't know their risk. You don't know their exit. And when the trade goes wrong, they disappear. But you're still holding the loss. Learn to think independently. Use others as information, not instructions. The ninth mistake is emotional revenge trading. You lose a trade, you want it back immediately. So you enter again. Bigger, faster, angrier. That's not strategy, that's impulse. The market loves emotional traders. They provide liquidity. When emotions take over, discipline leaves. Step away, reset, protect your capital. And now the final mistake, the one almost nobody talks about. The 10th mistake is not tracking your trades. No journal, no data, no review. You repeat the same errors because you never analyze them. Professional traders treat trading like a business. They review wins. They review losses. They look for patterns in behavior, not just charts. If you don't measure it, you can't improve it. Here's the truth. Crypto trading is not about being smarter than the market. It's about being more disciplined than your emotions. If this video helped you see things differently, subscribe to the channel, comment which mistake hit you the hardest, and remember, the goal isn't to trade more. The goal is to trade better.